What is going on with Bitcoin? Is it going up? Is it going down? Are we in a trend reversal? Is it correcting? Well, that's what we're going to look at in today's video. We are going to look at it from an objective, non-emotional standpoint using Elliott wave and Fibonacci. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008. Focused on trading currencies for 15 years, but now I exclusively focus on crypto. So let's dive straight in. Now, firstly, let's just jump back into a video that I did. I think it was on, let's have a look. It was on, yeah, the 15th. I think it was on the 15th. No, it was yesterday. Sorry, it was yesterday. This video, what we said in this video was the following. We said, look, we are likely to have a correction. There's two very key price zones. I'm just going to talk about it as a red line and the green line. The red line is the most typical, and then the green line is the most typical maximum if it was a correction. But today we're going to look at, there's only really two scenarios that can play out from here. And we're going to look at those in an objective, non-emotional fashion so we can make business decisions. Because remember, we are in the probability game, not the certainty game. So let's jump into Bitcoin. So this is the live chart as of today. And as we can see, wow, look at this movement to the upside. It just shot through this red line like it went there, which is a very key resistance zone, and it went straight to the green. And often what you'll find with Fibonacci and Elliott wave is if it doesn't stop at the first resistance zone, it will normally go to the next one. What was also another key, very interesting fact was we did some time analysis, and it was bang on the day, right? This day was, well, as of today, like last night, or yesterday, this is a typical maximum for this high, and it looks like it's made that high. So today we're going to look at, all right, what does this mean? You know, because a lot of my previous videos, I said, look, this black line over here, this $48,300 Bitcoin. If we go above this point and close above it, that we're probably going to see more movement to the upside, but we haven't closed above it. So today we want to look at what is going on and what does this look like. Now, first of all, you know, my private Telegram groups, like people that have taken my Fibonacci and Elliott wave courses, a lot of FOMO, fear of missing out, you know, fear, uncertainty, and doubt, which are natural emotions, optimism, pessimism, have I missed the wave, etc., etc. First of all, in the grand scheme of things, right now, this recent move in the grand scheme of things is tiny, right? And tiny, right? Because we want to be riding these kind of waves, right? That's where the big money's made, right? And this recent wave, it's a little tiny move, right? I know it's 10%, but we want to more use it as an indicator. And if you're trading Bitcoin as well, we can do some really interesting things today. So firstly, let's just start off with this picture here. Let's just jump into a weekly chart, top left. I want to look at this indicator. Still bearish, meaning that it's down, but we can see that the blue and the red are getting close to each other. So we should expect still maybe 1 or 2 weeks of sideways to down. 1 or 2 weeks of sideways to down. That's important to note. Second, let's keep on, we're going to really focus on the daily chart today. And we're going to focus initially on this part. Because now this part is over, we can kind of delete all of this. We can delete all this. We don't need this information no more. Let's keep the chart nice and clean. We can even delete this one, and we're going to draw this line down here. We'll keep that there. So what we're going to look at right now is two objective opinions, right? And the price, the Bitcoin price action will tell us what is likely to occur next. So we don't need to forecast. We just say, hey, based on the current information, this is what it looks like. So first of all, let me just bring this up here. This wave, our bias is still a wave A, but it actually could be a wave 1 or an A. And why is it a 1 or an A? Well, quite simply, wave 1s and wave A's look identical. And at the time when they're unfolding, you don't know if it's going to be a wave 1 or a wave A. So that's going to be important. And I'll elaborate on that in a second. Second, this down here looks like a wave 2 or a wave B. And similar to a wave A, a wave 2 and a wave B also tend to look identical. And wave 3s and wave C's can sometimes look very similar. So now, if I just draw this up here, and I'm going to put a question mark above it, is a wave 3 or C with a question mark? Right? This is the big question. Is it a wave 3? Is it a wave C? What does either mean? And if you're not familiar with Elliott wave, do take my Fibonacci and Elliott wave masterclass, because I cover the real core fundamentals on how to read the psychology of the markets, because around 50 to 60% of the time, they do unfold in identifiable, predictable patterns. So we are going to look at this from a very logical perspective. Is it going to be a wave 3 or a wave C? We don't know right now, but let's look at the information that we have at hand and what will tell us. So we're going to have one of two scenarios play out. We're going to either see a bit of a correction to the downside. Let me see if this picks up for me. There we go. Bit of a correction to the downside and then a continuation. If that's the case, then it's going to be a wave 3. Or the other alternative that may happen, may play out, is that we get a continuation to the downward trend, right, to finish off the bigger degree correction. You go, yeah, but Jagir, it's so confusing. So many people are saying this, other people are saying that, news is saying this. I go, well, look, we need to remember that all markets, a lot of speculation occurs, especially with crypto, especially with Bitcoin. A lot of profit taking happening, and it's psychology, fear and greed, and that's what we're trying to measure. So this is what I want to cover today. Elliott wave rules and Fibonacci ratios. We're going to take some time into consideration as well, and I'm going to show you something quite advanced, so do stick around because it's going to be very important that you understand this, because I don't think I've really covered it before. It's going to be to do with time analysis. So firstly, the rule with Elliott wave is a fixed rule, right? And it's measuring psychology, and that's what we're looking for. We're looking for clues. So firstly, if it is a wave 1, and then a wave 2 and a wave 3, then a wave 4 should not close in the range of wave 1. So if the price goes below this point here, that is the first major clue that this over here is a correction, and we should expect a continuation to the downside, right? The momentum, which is now in the overbought zone, this blue and the red line, it should coincide, and we're going to get very, very precise on this. When it moves to the downside, when the bullish reversal happens, meaning the blue line goes over the red, if the price is below this point, we can be confident that this high is unlikely to be broken or has less of a probability. If it's not below this point, then it has a higher probability that this high will get broken, right? But that's still too generic, right? We're going to get a bit more specific today, So let's just look at a couple of things. All right, so we've got some really clear data points here. Firstly, what I want to just cover with you before we jump in is something called time rhythm zones, right? If those of you don't know me very well, I used to be a breakdancer. Yep, back when I was 18, 19, 20, 21, 22, up to around 25. I've done a lot of breakdancing, a lot of music videos, a lot of shows, a lot of competitions, etc., etc. And a big part of breaking is hitting the beat, right? The rhythm. And what you notice with the markets is they have a rhythm. What is the rhythm of Bitcoin? What the heck are you talking about, rhythm, right? Well, we want to look at, first of all, these high to high rhythms, right? How long does it take to form this obvious high to the next high and then to the next high, right? I'm doing this in this way because sometimes it can get quite complicated, and I've seen people overcomplicate this, but we're going to keep it nice and simple, right? So here we can say, okay, the longest rhythm is this one, the longest beat, and the shortest one is this one. So we can take both of these and we go, where's the last major high over here? And we can marry it up to where this high went over here, and where's the shortest one? This one over here. And we can delete the other two. They're almost confirmers. And what we can do, and I want to show you this because you can use this for all charts, all markets, especially crypto, right? We can go like this and go, here's a rhythm zone. What you'll notice is that this high, this recent high, was made bang in this rhythm zone. We had like a 1, 2, 3 day window combined with pattern, momentum, time, and price, and this rhythm zone. It gives us really big clues on when the high is likely to occur. And then we can also now trade the swing. So what we're going to now look at is when is the next rhythm zone on the downside of the market, Because remember, we want objective information that's going to help us, non-emotional information. And I found, especially if you're watching the news a lot of the information, fundamentals even, is emotion based and can drive your emotions a little crazy. We're here, we can just go, right, the rhythm, let's forget his Bitcoin for a second. Let's just say we're just looking at price data, this low to low, this low to this low, and then we got this low to this low, and then we've got this low to this low. I mean, you can go in a bit more detail. I'm doing it very crass almost in a way, and this low to this low. So again, we can take the longest one, which looks like it's going to be, these two look identical. I think this one's slightly longer. So we can go from, either we're going to take this low. This is like the major low. We could take this low as well. And then we're going to take this one over here. And what we can do is we can got a nice rhythm zone, but we can also do a bit more of the rhythm. I'm hoping this is making sense because, this can help you identify lows and highs when you're kind of trying to get the peak buying and peak selling position of the markets. Because I realize a lot of people are very short term. I want to be in the trade for 2, 3, 4, 5 days, and then I want to be out. I want to scalp for 3 hours, and then I want to be out. And if you're doing that, this can be very, very powerful information. The other rhythm that I want to show you is the high to the low. This high to this low. This will make sense in a second. This high to this low, this one's not as obvious, but this one's more obvious. This high to this low, and then we can even take this high to this low. And what we do is almost the same thing. Let's imagine Jagir's breakdancing, trying to hit the rhythm, trying to hit the beat. We go, okay, what's the beat here? What's the rhythm over here? We go, all right, let's take this high to this low. It's around 3 days. Let me just make sure I get the arrow. Bump, bump. And we go, bump, 1, 2, 3. This one over here was also around 3 days. Oh, it's not clicking. There we go. I'm taking my time doing this because this can be very powerful, especially when we're looking at quite intricate data. I'll do 2 clicks. And then last but not least, this one here. So we got these zones, right? And this is the longest. And we can kind of project it from here. We can zoom in a second. And this is the shortest, right? Oh, let me just do this. Oh, come on. There we go. It's not behaving. There we go. We're behaving now. Right, so what I'm going to do is I'm going to just zoom in for a second. And what we got are these typical rhythm zones for this low. So we go, okay, this one is literally 1, 2, 3 days. Sorry, we need to take it from the high to the low. My apologies. This high here to this low. Let's make sure I got that one right. Yeah, boom, boom. Yeah, perfect. So we're taking it from this high to this low. And then what I'm going to do is I'm going to draw 2 vertical lines where the high probability low is going to likely occur between this date, which is what's the date here? 4th of October to the 6th of October. So we've got like a 2-day window where the next local low should occur, right? If the rhythm, doesn't mean it's going to stay the same, but it's more than likely going to stay the same. The rhythm doesn't tend to change that frequently, so we can assume the rhythm is going to change the same, or is going to maintain the same rhythm. We can get rid of this one. That was just more to let you know. We can also get rid of these 2, right? So because there's a key piece of information that I want you to take from today's video, and it's the objectivity. We want to be objective as much as we can, So what we're saying now is the next bullish momentum reversal, which would look like something like this in the range of between the 4th and the 6th of October. Let's just go in the middle. When this occurs, it should coincide with the next local low. But if the local low is lower than this point, I'm gonna write out exactly what that price is. If it's lower than this point, it's more highly probable that we've got a wave C on our hands. I'm gonna draw it like this. Boom. Here we go. Wave C on our hands. It's so intricate, isn't it? Jeez. But if we get the bullish reversal and it only goes here, it's likely that it's going to be more of a wave 4, and then there's going to be more likely to be a wave 3. Whether you love it or you hate it, this is the art and the science of Elliott wave and Fibonacci. And if you haven't taken my free masterclass on Elliott wave and Fibonacci, take it. It's in the link below. I've created it for you. Made it really, really simple to understand some of the fundamentals and the basics, the real core basics, but I go quite advanced as well. So you can start understanding that the psychology of the market plays out in identifiable, predictable patterns. So let's just do a couple of other things as well for you, just to finish off on today's video. And let me make this note. I want to, because sometimes I know I get your comments, I read all the comments, and sometimes I get a comment and I'm in my mind I'm thinking I'm sure I covered that in the video. So I'm not sure if people are just not watching the whole video or if I'm not making it clear. So it's really saying if Bitcoin, BTC, closes, let's say closes below this price, the price is 44858, below 44858. Another common question that I used to get was, Gia, why do you use dollars all the time? Well, dollars is considered as the global currency and is most common that Bitcoin and crypto is covered in dollars. If Bitcoin closes below 44858, then it's, and you'll hear me say likely a lot, likely to be a wave C. Boom, boom. All right, let's keep it like this. All right, so got it nice and clear. Here we go. All right, if Bitcoin closes below this line, which is 44,858, then it's likely to be a wave C. In fact, I'm probably just going to keep it like that because look, we did our last video and we got it pretty much spot on. We said, you know, and by the way, when you take my courses, not the free masterclass, there's some other courses, I've got them at a huge discount at the moment that goes into like step-by-step, bite-sized 5-minute chunks. And then you get invited to my private Telegram. And I tend to post my content almost immediately in the private Telegram. And then, so you get early access. And then on YouTube, sometimes there's a bit of a delay before we get it posted. But what we said before it happened was we've got these two price zones. And it reached the top price zone, this 1.618, this green line over here, which is where we are now. And what we're saying now is we should expect sideways to down for the next up until, what's today? Today, I'm filming this now at just before 9 a.m. UK time, 2nd of October. So 2 to 4 days sideways to down. And just to make it crystal clear, if the price doesn't go below this line and we get a bullish reversal on the momentum, we're probably going to break this high and then we need to reevaluate. If we do break below this high, sorry, this particular line here, $44,858, which is the high over here, then it's likely that this over here is a wave C, and then we should have a continuation for 1 to 2 weeks on the downside. So there you have it. Just thinking, anything else that I want to cover with you? Yeah, until we get a bit more information, then we'll cover the next parts, as we get a bit further down the line. So there you have it. Today we did a really, really kind of intricate, because we use time rhythm zones, which I don't think I've showed you before. We're using objective information, momentum, Elliott wave pattern on a few degrees. We're using Fibonacci price, which measures the psychology of the market, and some time analysis. Let's finish on a quote. Let's go to chapter 1. Chapter 1. Let's go for, I believe it's Michael Jordan. Michael Jordan, right? We can learn from Michael. What we can say is, and this is what he said, I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. Michael Jordan. We are in a probability game, not a certainty game. It's like playing a sport, right? Just because you're good at taking the shot doesn't mean that every shot's going to go in. right? And that's really, really important to know, because if you expect every single trade or investment to go your way, man, you're in for a rough ride, because it's just not the case. It's just not the case. Lastly, I want to finish off on is it's a scam warning. Scam warning. Just remembered. I just noticed yesterday, Daniela, thank you. You put it to my attention. There's a fake Telegram public group, and it's got my name, it's got my picture, and there's like 900 people in it, or it says 900 subscribers. It's not me. There's scams going on. In YouTube, I would never ask for your WhatsApp number or to join a WhatsApp group or even join a Telegram group. I haven't done that yet in YouTube. So just a quick warning, just be very careful. A lot of scams out there, and they're using my face, they're using my name, some fake accounts. Some of you guys like, Jagir, we made it. We made it. You know, imitation is the greatest, flattery. So people are imitating the channel. So just be careful. It's not me. So just don't fall for some of these scams, because it can look like it is me. So just be very, very careful. So if you like today's content, like, subscribe, hit the bell notification, take my free Elliot and Fibonacci masterclass, and I will see you very, very soon.